Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Wednesday, the 13th of October. All right, now the week has really started. The North American component is back online after a long weekend. We've seen a little bit of a drift back on the Treasury yields. Okay, that's to be expected. We've got a big day coming up, US CPI data and the FOMC minutes. So with that, you would expect some sort of profit taking leading into those numbers. But you know what, the whole week really stems around these US numbers. Now, we do have a bunch of numbers coming out of the UK. Manufacturing output's a nice aggressive one, as well as obviously the GDP estimate. But it's not like the Bank of England are giving us too much away what they're going to do, talking about higher rates. But anyway, so a lead in will be the sterling numbers for those European traders. But the whole week revolves around the US dollar, or the whole market does for that matter. So we're waiting for confirmation of when the Fed are going to start their tapering their asset purchases. Last Friday's non-farm payrolls, 4.8% is a much better number than forecast. That's what the Fed will be focusing on. It's getting closer towards maximum employment, right? So I expect them to pull the trigger pretty shortly. And obviously that move in the Treasury market is suggesting that as well. So now the numbers, 5.3 expected. So with that, and that was the prior number there as well. So anything stronger than that is got to be a massive worry for the central bank, right? Because inflation will get out of control and the whole thing just lights up like a Christmas tree. They're going to start tapering asset purchases, probably even raising interest rates. So what we're looking for is, I'm looking for numbers above 5.3. 5.3 and above gives us a move. A number like 5.4 and above, right, really gets the dollar rocking. Treasury yields should rally, equities should fall. The dollar should rally, and the dollar block, euro, sterling, Aussie, Kiwi should fall as well. Now that's the way of it, right? But to get a little bit more precise, you need to come over to your currencies and look at the technical setup of some of these pairs and work out which pairs are going to be the best to trade for a strong US CPI number, like euro, which is just trending down. There's no support levels. It's just drifting lower. It's easily going to just move to the downside on strong US numbers. Some of these other pairs, like Aussie has hit a top and now sort of looks a little bit softer, as does sterling. Kiwi's just trading sideways. I'm just trying to work out which pair I would trade with strong numbers. It's probably dollar yen, right? The yen is getting pushed down with the US Treasury yield. So dollar yen's going up, but the really strong oil price above $80 is really starting to hurt Japan. And that's putting downward pressure on the yen as well, right? So to me, a really strong US number, dollar yen goes up. And if you were watching oil and that starts to rally as well, well, you're going to get a double whammy there on dollar yen. And that's what we've been seeing, right, so far. So that's where it is. Work out which pairs you're trading, which ones you like. You know, ideally, some of them usually have a better setup for a strong number or a weak number. In this instance, I think a strong US number, euro is a nice, easy trade. We've got some levels here to work with on Aussie, Kiwi, and sterling. I'm not really interested in dollar CAD. We had strong Canadian employment numbers pushing this thing down. We've got strong oil, which is pushing it down. So a strong US number doesn't really work too well. I tell you what does though, a really weak US number feeds straight into all the other fundamentals, the Canadian data and the stronger oil price. Dollar CAD to the downside on weak numbers, it's got to be a pretty good trade. All right, guys, that's it for me. It's pretty exciting. Now, take your time. It's the start of the week. We get a good direction out of this move, right, out of these numbers. We've got US PPI, US retail sales, Thursday, Friday. What more could we want? Okay, keep an eye on those Treasury yields. They will be important. Obviously, with strong inflation numbers, you'd expect those to rally, equities to fall. You get that structure. You can be very confident that the dollar pairs will rally and the dollar block will get nailed. All right, guys, good luck. All the best. Cheerio.